about insurance. They, it's interesting when you want to have a lunch hour, whether you want to spend it talking about the latest sports and weather updates, or whether you want to have a conversation about insurance. But I hope that we provide you and your members with some information that will be helpful to you going forward. We want this, of course, to be as interactive as possible, and we are happy to answer any questions during or after the presentations. One of the things that I'll just provide a bit of a caveat here before we get started. You will notice that a number of these slides are very wordy. There's a lot of content included in the slides, and it's done purposely. Melanie and I have done these presentations with other jurisdictions, and we do leave the slides with you, but we find that without the audio, the verbiage and the explanation, sometimes the slides won't mean that much to you. So we've kind of loaded them up a little bit more with some of the content that we're going to be talking about this afternoon, with the idea that if you ever want to refer to these slides again, you'll have a better understanding of what it is that we were having a discussion about, as opposed to just some very small bullet points, and then we'll speak to them. So with that, it's a pleasure this afternoon to have the opportunity to speak to you folks in Northwest Territories. We are finding more and more that there is some questions that are related to insurance that are coming from private practice lawyers. And so we'll hopefully be able to address most, if not all, of those questions this afternoon in our presentation. What we're finding is that we're receiving quite a few questions around the cost of insurance and rates, which is a normal question which we normally get. We are finding more questions on claims and how to remit claims. We're receiving quite a few questions on retirement and what to do when and if you're looking at and thinking about retirement. And and then the last one, of course, is some new insurance coverages that we are offering in the cyber world to protect you and your firm from any type of cyber breach or cyber claim. So if I'm hoping we'll be able to cover some of those things off in our presentation this afternoon. And the agenda that I have, and Mel and I have, is right in front of you here. First of all, to give you a bit of an understanding about what is CLIA. Some of you will have that knowledge already. I can tell by the people who I see on the participation list that some of you will understand what CLIA is. We're going to talk about the different types of insurance that CLIA offers. And again, we'll talk about some insurance coverage for retirees, and then the cyber option as well. So we'll start off with what is CLIA, and it's not really an easy answer. It is actually quite an involved answer, because CLIA is a unique entity. It formed in 1988 by the Federation of Law Societies at a time when insurance costs, insurance premiums were very significantly high, and it was very difficult for private practice lawyers to find affordable insurance on their own. And so the members of the Federation of Law Societies were having conversations about this, and they decided that the reciprocal insurance structure was something that would enhance the lawyers' abilities to find affordable insurance, and that it was appropriate for members across these different jurisdictions of Canada to participate in this reciprocal. Um, the CLIA, the reciprocal, is a not-for-profit organization, and it provides insurance products for 9 voluntary jurisdictions or members, and they're made up of the 6 provinces and 3 territories in Canada. The only the only jurisdictions that don't belong are British Columbia, Ontario, and Quebec. And the reason that they don't belong is primarily because they're big enough to be able to manage and administer an insurance program on their own. So they have enough membership that they can manage their own insurance program. So our role in CLIA is to assist law societies in the fulfillment of their public protection mandate. It is to administer the insurance reciprocal and assist with the management of insurance claims, if we have any. To market and manage excess insurance for private practice law firms, and to develop insurance programs for the CLIA subscribers. I think most important, and one of the things that Mel and I want to leave you with today, is that our role is that we are here for you, and that's the private practice lawyers in Northwest Territories. In the next couple of slides, I'm going to give you a bit of a history of how CLIA was formed and the central office was created. We're located here in Regina. But the message that I want to make sure is left with you today is that we are an organization of volunteer members. So without our volunteer membership, this organization wouldn't exist. And we are here solely and exclusively to support and assist you with any of your insurance needs. Okay, Mel, go to the next slide. So you might ask yourself, what is a reciprocal? And that's an excellent question. It isn't a bank, and it's not a broker service, and it's not an insurance company. And really, there is no real entity to describe what a reciprocal is. The best that I can do is share with you that it is a non-entity. And we are that for the simple reason that we don't pay income tax. All of our investment income and underwriting income, it goes into the reciprocal and is distributed to the membership equally through what's called subscriber accounting. Our premiums that we collect are subject to tax, premium taxes, and we are regulated by a provincial jurisdiction. Ours is the province of Alberta, the superintendent of insurance in the province of Alberta. And they require that we follow all of the rules of the Office of the Superintendent of Financial Institutions. So even though we aren't a bank or an insurance company or a broker service, we do act like one, and we are expected to follow all of the appropriate regulatory rules and regulations. Okay, Mel, next slide. So as I mentioned, I was going to give you a bit of a history of where we are today and how we got here. And as I mentioned in the first slide, the reciprocal itself was created in 1988 by the Federation of Law Societies. The members were, at that time, all of the provinces and territories in Canada. And that was a time when there was membership participation. All of the members of the program met annually and had a discussion every year about the performance of the reciprocal. And they would review all of the governance documents, and they would review all of the committee structures as well. And when CLIA was developed, there were a number of governance and policy guidelines that were created in order to ensure that the reciprocal was run in a fair and equitable way for all of the members of the program. And the guidelines and the policies that were developed then still exist and are reviewed and are followed today. And they include a subscriber agreement, which basically outlines how the reciprocal should be run, what the responsibilities are of the board, of the management, and of the subscribers. There are a set of rules of the reciprocal, and that basically outlines how the accounting is done. If you think about a reciprocal as a big pool of money, within that pool, each of the members have their own accounts. And so when we do the subscriber accounting, as I mentioned earlier, you get money for your investments and your underwriting income. We collect premium dollars from each of the jurisdictions, and then the operating expenses, which are basically the operation of the central office, is all distributed proportionately among all the subscribers. So each of the jurisdictions of CLIA have its own accounting responsibilities, and we do the accounting for all of the different jurisdictions, and all of those how that's all disseminated is all done within the rules of the reciprocal. We follow a surplus policy, which tells us as a reciprocal how much and when we can give money back to our membership. We have an investment policy, which also tells us what we can do and what we can't do with respect to investments and how those investment dollars are to be disseminated back to the subscribers. And then, of course, we have an insurance policy or a policy of insurance, which is the document by which all of the members and their members are insured under the CLIA program. Anyway, the history of that is that after about 30 years of existence, all of the administration of the CLIA reciprocal was outsourced to a third party in Toronto. It was formed under a brokerage by the name of Watson Wyatt, and Watson Wyatt became a company called Dion Durrell, and then Dion Durrell became a company called Axima. Over time, that brokerage were the ones who were responsible for administering the reciprocal. After 30 years of existence, the membership came to an agreement that they felt that the program was mature enough that it warranted its own central office. When it was being administered by a third party, that third party had CLIA as a client, but it also had multiple other clients that it was sharing time with. And I think the membership were of the opinion that the CLIA program warranted exclusivity, and the costs, of course, were increasing annually, and that it might be more cost effective to create a central office and to administer the reciprocal by itself for CLIA. So the membership hired an executive search firm, and the executive search firm hired the first CEO of CLIA, and that happens to be myself. I am located in Regina, and that's why our office is located in Regina. My objective, my role, my marching orders from the board were to establish a central office here, to hire it, to open it, and then transition the administration from a third-party administration service provider into the central office here, and then continue to administer the reciprocal on behalf of its members out of this office here in Regina. So that has happened. I was hired in January of 2016, and we have an office here in Regina of 6 people, And we continue to look at ways that we can bring value added to our membership, as well as managing the administration of the reciprocal on an ongoing basis. So that is really the history in a nutshell of where and how CLIA was formed and how we wound up in Regina with a central office here with 6 people helping you administer the reciprocal. During this change, it required a pretty substantial change in governance as well. As I mentioned, on an annual basis, the membership used to come together and have a meeting about the performance of CLIA, and that all changed with the creation of a central office. And the board went from a participation board to a policy governance board. And the policy governance board is in existence today. It has been since the creation of the central office. It is a 7-person policy board. It is the members of the board have terms of 3 consecutive 3-year terms. The members are selected from a skills matrix. We have a committee, a nominating committee, who go across Canada and look for volunteers who want to sit on the CLIA board, and they use a skills matrix to determine who those people are who are selected to sit on that board. The board members sit 6 times a year, 5 board meetings and 1 annual general meeting, which is conducted in May every year. So out of all change and the creation of a central office, a CEO, and a policy governance board, the first order of business came to be a strategic planning session with the new board members, the management team of CLIA. And out of that process and the strategic planning process, these founding principles were created. And there's 4 of them. They are to provide reliable and permanent sources of insurance for a non-profit basis, on a non-profit basis, pardon me, to ensure the availability and reasonability of pricing and the effectiveness of excess insurance, to stabilize premiums in both the mandatory and the excess layers, and to ensure premium rates reflect the loss experience of Canadian lawyers. Okay, Mel, next slide, please. These are today the different types of insurance products that CLIA offers. In 1988, when CLIA was established, the mandatory errors and omissions coverage and the excess errors and omissions coverage were the only options that were available to private practice lawyers. In 2006, in March of 2006, defalcation insurance was added to the list. Defalcation insurance, for those of you who don't know, is trust misappropriation insurance. It's in the event that there is some misappropriation of trust monies within the firm, the compensation fund, as we call it, or the defalcation insurance, is there to protect the public and refund the public of any funds that are misappropriated from trust accounts. So that was established in 2006. And then with the development of cyber crimes and cyber risk, in July of 2017, CLIA created a very rudimentary mandatory cyber crime insurance policy, and that has really evolved year over year as the market for cyber insurance has also evolved. We've been able to do some more things with cyber insurance that we weren't able to do in 2017. Then in 2021, just in the last couple of years, we created an excess standalone cyber crime insurance policy coverage. that is very robust. It is, we believe, very responsive to the types of risks that cyber criminals um, are creating. Our hope is that we can try to stay at least level with them or try to stay a little bit ahead of them as they become more creative in how they can uh, get information out of your offices. We try to figure out how to stop them, and if we can't, how to protect you and the public from those types of risks on a go forward basis. Next slide, Mel, please. So very briefly, just a overview of what the mandatory errors and emissions insurance covers. It is an insurance that is in place that renders insurance of for professional services that you're providing to others. The Law Society rules require lawyers to be insured, and so the Law Societies uh, basically issue that insurance, and CLIA is the one who underwrites that insurance level of insurance for you. The limits that are provided under the mandatory insurance are a $1 million per claim limit and a $2 million per year aggregate for each private practice lawyer in that jurisdiction. Individual lawyers, if you are to submit a claim, are responsible for a deductible. That deductible is $5,000 for the first claim. And CLIA is responsible for the management of the claims up to $1 million. And in Northwest Territories, we do the claims administration for your jurisdiction as well. Everything above the $1 million limit is provided by the excess insurance market. The excess insurance market is basically just the commercial insurance marketplace. We have and we do each year negotiate terms and conditions with the commercial marketplace for our excess insurance. Melanie will talk a little bit about the excess insurance in a few slides from now. Okay, Mel, next slide, please. So as I mentioned, one of the questions that seems to come up from time to time, and this isn't just exclusive for Northwest Territories, it's a question that we get right across Canada, and that's how are the premiums that the law societies charge, how they're calculated. So I'm going to try and give you a pretty high level breakdown of how the premiums are calculated. First of all, the goal is to derive a fair base premium rate that reflects the financial realities and the risk exposure for each subscriber. And so that's the base rate that is calculated. I'm not a actuary, but a lot of the information that we get in calculating this type of information is done through our actuary. We have an appointed actuary who looks after the CLIA reciprocal, and they help us with the development of these premium calculations on an annual basis. So as a CLIA member driven organization, the premium rates are designed to break even without including any profit components. So as I mentioned, CLIA is a nonprofit organization. We don't add any component of profit to the calculation of your premiums whatsoever. They're basically set to maintain an appropriate level of financial surplus that's required by the CLIA board and the regulator. And those are non-negotiable, and we are expected to have a certain amount of surplus in our bank account at any particular point in time. Okay, now next one. So step one is determining the base premium, and it's done by the actuary, as I mentioned, and it's done on an annual basis. It includes the expected losses for each subscriber and CLIA as a whole based on 10 years of previous claims experience. And then we assess the changes in the frequency and the severity of those claims over those 10 years. And we factor in the administration expenses and the anticipated investment returns and discounting for the time value of money. So it's not really a complicated process. Those are basically the things that go into the calculation of a premium rate from CLIA. Next slide, Mel, please. So step two is determining the credits or the surcharges. And as I mentioned in the previous slide, the regulator and our board require us to retain some surplus here within our bank accounts at CLIA. So each subscriber is, their financial position is calculated and monitored through the subscriber accounting process, which I mentioned to you, which is part of the reciprocal. The rules of the reciprocal that were approved by the subscribers outline how claims, operating expenses, and investment income premiums and revenues are allocated. So we follow those rules to allocate the investments and the expenses. And then each subscriber's financial position is compared against the targeted surplus, which is a minimum asset test set by the board and approved by the subscribers at the annual rate setting meeting that happens in late March or early April. Usually it's around late March. Okay, Mel, next slide, please. So the final premium calculation basically is to take the base rate from step one and combine it with the credits or the surcharges from step two. And so that basically determines what the premium is from CLIA. We give that information at the rate setting meeting in March, and then the Law Society determines what they're going to do with the CLIA rate as well, because they can add some administration load or other things or credits to that CLIA rate as well, and that is up to their discretion. Each jurisdiction just takes the CLIA rate and they determine whatever the rate is going to be based on whatever their situation is at that particular point in time. In the last number of years, because of investment surplus volatility, the surplus that we were looking at for our subscribers was quite volatile. And the membership came to us and said that they couldn't manage that volatility, that it was too difficult to deal with for their membership. So they asked us to, and they voted on and asked us to limit the changes and bring some premium stability to the process, that no more than plus or minus 25% from the previous year will be the change in the base premium rate from CLIA. And so we have done that. The minimum amount of surplus from the surplus policy is 25%. And we must maintain that surplus as required by our regulator. Okay, Mel, next slide, please. So what I've tried to do here is give you a bit of an example of how the rates are calculated. This is the rates that were calculated for the Northwest Territories jurisdiction in 2024. And I can share with you at a high level that other than the first two lines that are given to us by the actuary, the rest of this is really basically simple math. So in 2024-25, the expected number of claims that we received from the actuary for Northwest Territories was 2.5 claims. The expected loss per claim was $124,800. And that's, again, is over a 10-year period of severity and frequency of claims. The expected aggregate losses is basically just taking that 2.5 number of claims and multiplying it by the expected loss per claim, which is 312,000. The discount factor is a factor that is determined based on the number of claims and the surplus that we have on hand. In 2024 for Northwest Territories, it was 82%. So if you take the expected aggregate losses of 312,000 and you add the discount factor of 82%, the discounted expected losses is 255,840. And then we have an expense load of 30.73% that we take off of that discounted expected losses, which gives you the expected losses and expense load of $195,118. You take the number of lawyers in NWT, which was 98 in 2024, and you divide 98 by 195, 118, and you get a rate per lawyer of $1,991. We add a $10 stop loss insurance component for each lawyer, and the base rate is for 2024, $2,001 per lawyer. That's basically how we do calculate the rates for each jurisdiction. The numbers will change based on what jurisdiction we're in, but this formula is really how the base rates are calculated. Mel, next slide, please. I'm just going to slow down a minute here and make sure that I'm clear in covering these differences. We've had a number of questions and occurrences, in fact, around our insurance policy and claims. And there is a difference between what the commercial insurance market may offer and what the CLIA policy does cover. And the CLIA policy is a claims-made policy. And what you can find in the commercial marketplace is generally an occurrence-based policy. And a claims-made policy is a policy that covers claims that occur and are reported within a specific time period set by the policy. So that means that if you have a claim, you have to have had insurance in place during the time that that claim was made, in the policy period that that claim was made. Our policy period runs July 1st to June 30th every year, and it just repeats itself over and over again, year over year. So if you have a claim this year, you need to report that claim to the Law Society and to CLIA prior to June 30th of 2025. The difference between that and an occurrence-based claim is that occurrence-based claim protects firms from any claim that happened during that policy period, regardless of when the claim is reported. So an occurrence-based claim, you can report a claim that happened 5 years ago, 10 years ago, 15 years ago, as long as there was insurance in place at the time that the incident, the occurrence took place. Okay, Mel. So the CLIA policy, the mandatory policy, is a bit of a hybrid of those two types of coverage. And it is because members of the Law Society can have insurance after they're done practicing as lawyers. So as long as you're in an active status, then it is a claims-made policy. But if you retire or you resign or you die or you're disbarred, then it becomes an occurrence-based policy. So this is why it's a bit of a hybrid. It's a claims-made policy as long as you're in an active status with the Law Society. So that means, again, that any claim or potential claim must be reported within the policy period in which the insured had knowledge of the claim or a potential claim. If after you are no longer active with the Law Society, the insurance changes to an occurrence-based policy. If you are retired, resigned, or die, you're disbarred, then the policy becomes an occurrence-based policy and will cover you for occurrences that took place during the period in which the member was insured. Okay, Mel, slide please. So the excess insurance, which I mentioned to you, is insurance that's purchased from the commercial marketplace. So this is sort of traditional insurance. It is a claims-made policy, and that's all it is. So if your firm or you're a sole practitioner and you're buying excess insurance, that excess insurance only exists as long as you purchase it. So if you are retired or you are disbarred, you probably will want to buy some excess insurance to cover you for the time that you're not in an active status. Okay, so the excess insurance policy is a claims-made policy. The insurance needs to be in place when the claim is made and not when the work is done. It's non-transactional based coverage, and the firm that does not renew their insurance will not have coverage for losses reported after the expiry date of the policy. And we do have retirement insurance coverage for anyone who's interested in having excess insurance after they are no longer active with the Law Society. Okay, I'm going to turn it over to Melanie. She's going to talk a little bit about more about excess coverage. The defalcation.
Actually, Dave, there's just one last little bit on the
Okay.
compensation fund that's with you still.
Okay. I mentioned to you that this is a coverage that we brought on board in 2006. It protects the public against trust fund misappropriation. And in order for the insurance to be current, the comp fund program has three elements: the Law Society retention, the CLIA policy, and the reinsurance policy. So much like the mandatory, where you have a deductible and then you have an mandatory insurance and excess, this is set up very much the same way. Each Law Society maintains an equal per claim retention. In this particular coverage area, the retention is $100,000 and with an annual aggregate of $500,000. And the limits on this particular coverage are up to $9 million for each jurisdiction, except for PEI and the territories. And that limit is $4 million. Okay, Mel.
There we go. Let's turn my volume up. I'll skip ahead. So I'm going to take over and fill in a few gaps on things that Dave's already started to explain a little bit about. So starting with the CLIA excess coverage. So we actually call our program the voluntary excess program. And that's for the reason is that it is voluntary. So again, lawyers are required to have that mandatory coverage up to the 1 million that Dave already explained. Past that, though, if people are looking for excess coverage, again, CLIA offers that. The chart that I'm showing you here shows the limits that are available. You'll see they go all the way up to 34 million, and that's new for this year. Each year we do a survey of all our VEP, is what we call the program, customers, and looking for feedback, ways to improve. And again, one thing we really heard last year was, gosh, we need higher limits. So we were able to get up to that 34 million. Another thing that I think is interesting here is, again, in the middle, we have the premium rates. And then we also did the cost per million. And what you'll notice, and again, what I find interesting is how much the cost per million goes down, the greater that limit goes. So again, it's pretty darn good value for the security that you're getting with that 34 million at $68 a million. Now, Dave's talked about quite a bit of this already, so I'll just touch on a few things. Again, the VEP is 100% reinsured to the commercial insurance market. So CLIA retains no risk, but does have credit risk and collection risk. The rates are driven by the global reinsurance markets, and the VEP expenses are added to the rates. Again, CLIA collects no commission or profit sharing from the markets. It goes directly to into the premium calculations. And really important thing, other than when the policy period is, and again, it's the same as the mandatory period, which is that July 1st to June 30th each year, is that it's a follow form policy to the mandatory insurance policy. And that means that again, it follows exactly the same terms and conditions as the mandatory insurance policy. So there's no changes there. It's really about those limits changing. Okay. I just want to have you keep in mind, like Dave said, we put a lot of information on the slides and they'll be provided to you. Most of, if not all of this information is also available on our website. So if you're looking for more information about, again, do I need excess coverage and some of the factors that we're going to include here, don't worry about trying to jot these all down. Again, you're going to get the slides and it's available on our website. So some of the factors or some of the points that we've included here about, do you need excess are, again, think of it as excess insurance provides another layer of security. Should your defense and indemnity costs exceed that primary mandatory limit. So again, we do have the mandatory limit at that 1 million, but again, something to think about again with that second point is the value of clients' transactions increasing over time. So does the need to secure adequate levels of E&O insurance. So, and as our third bullet point says here, one large claim could quickly erode the primary policy, so that mandatory 1 million, which could leave you or your firm exposed to personal liability. And again, Dave's done a great job of pointing out the really common questions or common feedback we're hearing from lawyers in all the different jurisdictions is, well, isn't excess just for higher risk areas or large firms? And again, what we try to stress to folks is that all legal work can have exposure to large value claims. Even small matters like a will, prepared by, as we said here, by a small firm in a rural community, which we see frequently in Saskatchewan, and I'm assuming you're going to see in the territories as well, could result in a claim over 1 million. So again, that's something to think about. And when you're thinking about the, whether or not you need excess and coverage, it's not really just about the risk of the firm. It's got to assess the risk of the whole firm, not just the individual. So really it's looking at again, the risk that the firm has, what kind of work they're taking on. And that leads us right into the, factors to consider. Again, think about the types of transactions that potentially impact on your clients. So, are you dealing in transactions, large value transactions? Could there be large damages to your client if something goes wrong? Again, having those higher limits might be worth it for you. Also, the size and frequency of large transactions. Again, if you're handling quite a few, again, something to think about. Whether former associates and partners have coverage that is either inadequate or excludes their past activities. Something to factor in, and whether the impact of the advice you've provided may grow over time. And again, so that could be the potential liability could grow over time. So again, really look closely at the type of work you're doing, the transactions, the impact to your clients, and assessing if you need excess coverage. Now, as Dave said, excess coverage is available out in the market. CLIA, again, provides this, and we've listed quite a few different reasons why we think there's good reason to choose CLIA for that excess coverage. Other than, again, we've got great limits, good value for that security, convenience, and again, it's kind of that one-stop shopping experience. We have over 35 years experience in dealing with lawyers insurance across Canada. We have that relationship with the reinsurers and the law societies. One thing I wanted to point out there too is it's really about the CLIA philosophy, I'll say, with that relationship with the law societies. We have the same philosophy or the same mandate as the law societies, which is public protection. So again, we're not a traditional insurance company. We're not looking, and again, the idea that's out there, the feeling that's out there is that insurance companies are looking to deny claims. And again, we're looking to protect the public. So again, there's that different philosophy there. Also, the claims consistency, and I think that's a huge factor for our members, is how your claim is handled. The people that are handling your claim up to that mandatory limit would be the same folks handling a claim that's in the excess layer as well. So you're gonna, again, it's gonna be dealt with the same way, the same people, the same reporting. You're not dealing with a different insurer to report if there's a claim above that 1 million. Um, like Dave said, we're a 6-person office, great staff. You're going to get that personal touch. So when you have a question, you send it to us, you reach out, you're going to get, it'll likely be Sheila or Cindy that you're going to talk to. And they're wonderful, knowledgeable, and they're going to get back to you right away. Like I said, we do a follow-up survey every year, and our customer satisfaction is I think it was 98% last year, that they're satisfied with the service they're getting from CLIA. And there's also a referral program. So there's a discount that's provided if you are referring folks for the excess coverage. Dave touched on this a bit, and I just wanted to go in a bit more detail. Again, an area we're seeing huge growth and a lot of questions coming in as the demographics change in our profession is retirement coverage. Like Dave said, that mandatory insurance exists as long as you're a member of the Law Society. So there is, as we call it, tail coverage. So, as long as you're a member, and different jurisdictions have different terms for what that status is, whether it's retirement status, inactive, etc. But as long as you're a member of the Law Society, that's covered for you. So again, it changes from that claims-based to occurrence-based. So if 2 years before you retire, there's an occurrence, you retire, you're still covered for that occurrence even after you retire. So it doesn't matter if you've made the claim in that policy year. Okay, and let's move on. Now with the excess, it's a little different and a little trickier here. Big takeaway here is that retirees remain responsible for the work they perform prior to retirement. So like I said, as long as it's under that, it's within that mandatory limit, that tail coverage is provided for them. So as long as that occurrence took place during when they were a member, they would still be covered. But excess doesn't work quite the same way. So it only applies to claims that occurred when you or your firm had CLIA excess coverage in place. And we've put an example in here, and I'll try to explain it a little further. So for example, if your firm has continuously had CLIA excess coverage in place for the last 10 years and a claim occurred 8 years ago, the claim would likely be eligible for coverage under the current insurance policy. But if the claim was 15 years ago, before that firm had the coverage, then the claim would not be eligible for coverage under the current insurance policy. So again, if you're retiring, and your firm has excess, basically you're continuing that excess coverage. If again, and I'm going to go into some factors to consider if you're for retirees thinking about whether or not they need access, and they're very similar to what I've already gone through. But the point is you want to keep that coverage if you think there's a possibility of a claim occurring down the road. You want to keep that continuous coverage. Again, I won't go into too much detail because I've already gone over some of these factors. But again, it's about retiring. Think about the transactions and that potential impact to your clients. Again, size and frequency of large transactions. Whether, again, I won't read these again, whether former associates and partners have coverage, etc. And whether that impact of the advice you've provided may grow over time. And then I've added there, retirees should continue to renew their excess coverage for however long they believe there's a possibility of a claim. So, whether it's, 2 years, 5 years, if thinking back, you're going, you know what, there's still a possibility that there could be something that arises from some work that I did while I was in private practice. then they should be keeping that coverage in place. Now, let's make sure. Oh, and one important thing that I don't want to forget, another factor to consider or when you're retiring and thinking about coverage is we do offer a 25% discount to retirees on excess. So again, good value perhaps for some peace of mind that, something that occurred in your work before you retired may result in a claim later. Keeping that coverage in place with the discount could help. There is some eligibility for retirement coverage. So they must be retiring as a current member of CLIA's VEP, either as a sole practitioner or as a member of a firm. And that's what I already explained. So when you retire, that excess coverage has to be in place with the firm, or if you were a solo practitioner. You can't decide then to get that excess coverage. It has to be a continuation of it. You must, of course, apply for a status change with your law society. So again, and I'm not sure what it is in Northwest Territories, but in Saskatchewan, there is actually retirement membership that you can apply for. And the coverage is limited to matters arising out of professional services rendered prior to retirement. So again, we'd hope that once you retire and you change that status, that you're not then continuing to provide legal services. But if say there's, the dinner party advice that you're giving out, you won't be covered under the policy for that. It's for the work only before retirement. Now, I'm going to leave that and just move on to our cyber coverage. And again, Dave touched on it a bit. I'm going to go in a lot more detail here. Basically, like Dave explained, we have two programs in place. So the first would be that mandatory cyber insurance program. And that's purchased by each CLIA subscriber, subscribing law society. And that provides coverage for their members who are required to be insured by a mandatory lawyer's professional insurance. So if, according to the rules in your jurisdiction, you're required to have mandatory insurance, you're also required to have the mandatory cyber. Like Dave said, that's been in place, I believe, since 2017. And again, in response to the growing need, the growing risk in the area of cyber. A few years ago, we also realized that perhaps what was included in the mandatory, some of our members might be looking for more. So there is now an optional enhanced standalone cyber insurance, similar to the excess for the mandatory E&O. So again, it can build on the protection you have under the mandatory. And I'm going to just go to my next slide here, which shows a table that gives you an idea of what's covered and what's not. And so you'll see, and you can find this on our website, that there's actually a breakdown and explanation about what all of these are. So what network security and privacy liability, et cetera, all are. Everything that's under this column here, so these first five and this down here are actually included in the mandatory cyber. So again, what you're required to have with the law society. But under the standalone or the excess, there is, again, higher limits for what's included in the mandatory. And then there's some additional coverage as well for things like social engineering fraud. For example, let's explain what that is. We're seeing an increase in this area. That's when, say, a client's email is hacked and they fraudster will use that email to email the law firm and say, oh, we decided to change our banking. Please send the money from this transaction to this different account. The law firm then may do so, and what happens then is the fraudster then gets that money, and so your client is out. Just so you know, and I just want to throw this in just as a really good reminder, the protocol that you should be doing is if you receive any kind of email instructions from a client, those need to be confirmed by calling the client on the number that's on your file, not a new number that they provide you in the email. We found that simple procedure reduces the amount of instances of this greatly. So again, simple thing to do can reduce it. But if, again, that's something that you're worried about, there is the standalone cyber that you can get coverage then for that as well. Okay. Now, to be eligible for the mandatory cyber policy, there are some requirements in place. And again, this is all available on our website. We have 6 controls in place. Includes backup controls, patching, antivirus firewalls. You'll see that we also include why it's required. For example, backups ensure that your organization can be restored after a ransomware attack. Um, and then we've also tried to provide some help for lawyers so they can make sure that they're meeting these requirements. So for each, there's some instructions on where and links on where they can go to get that those requirements met. The next 3 are multi-factor authentication, email scanning, and employee awareness training. Um, and again, some help for lawyers here about where they can go to get further assistance there. I just wanted to point out the employee awareness training. And you'll see in the column beside it that it says employees continue to be the most exploitable element of an organizational security in Canada. Therefore, it's imperative they're trained properly. All of these factors are incredibly important. And again, they're very basic, we call it cyber hygiene that you should have in place. And again, that's why they're requirements for the policy. Employee awareness training, it is a huge one though. Like I was saying with the protocol and the social engineering, training your staff that if they receive a simple one, they receive an email instructions from a client that they need to verify that on the phone with the number that's on file. That's a huge step towards avoiding a cyber claim. We do have, again, we said here the training's not prescriptive and it can take any form. Us in-house, we get great training where we get some emails actually sent to us to see if we're caught. And if we are caught, then we're sent to some training videos. That's a fantastic training. We also have a video available on our website that you and your staff can view, which would actually meet the requirements. But again, I think the more employee awareness and awareness for yourself that you can find and offer on recognizing things like phishing emails, understanding what that is, really understanding how hackers are trying to again infiltrate your your emails or your systems can go a really long way. So I just wanted to stress that one. Now on the cyber side, law firms are required to go through a different application process, or actually through an application process. For the mandatory, you're not. You just have to have these requirements in place. So when they're applying for insurance, they must meet certain requirements, and they're typically more extensive than the mandatory requirements in order to be eligible for the excess. And if they fail any of these underwriting questions that they would be provided, then they still might be eligible, but with additional underwriting, or they might not be eligible and be required to make changes to their IT systems or processes. Now, again, if you're interested in this, on our website, we do have some further information about, if you're applying for either our excess, insurance or excess cyber insurance. And in there, it does explain that you may actually, for this one, because we find some of the questions are pretty complicated, and depending on the size of your firm or your expertise, it may be something that you actually have an IT professional on staff or somebody you contract with who you might need to get some of this information from. So you can actually contact us and get some of these questions in advance, and that might be a good way to go. That way, the application process won't be as complicated for you. Now, reporting a claim. So for errors and omissions, we really want to stress that you really need to be reporting that claim as soon as practicable after learning of a claim or becoming aware of circumstances that might give rise to a claim. And it doesn't matter if you think, well, that seems ridiculous. Report it. Like Dave was explaining earlier on with the claims made versus occurrence-based. If you become aware of a claim, you need to report it within that claim year. Not only could failure to report mean that you may jeopardize your coverage under the policy because it's a claims-made policy, but perhaps, well, just as important is there could be an opportunity there to repair the claim. So contacting or reporting the claim to us is who you'll report it to, means that you may be given some advice on how you can fix it to avoid the damage to your client. Um, again, some examples of when to report, and we've tried to, again, provide some maybe a bit more concrete examples so people start thinking it's not just about what they think goes, oh, that's obviously a claim, but to really get them thinking about if there's some circumstances that could give rise to a claim. An obvious is a mistake is discovered, which has or may have caused damage to a client. So again, that could be, you know what, we've missed a limitation period, or yeah, there was again some kind of error that resulted in damage to the client. And again, that's the obvious. It also could include any threat or communication of intention to sue made by a client. So again, your client, you may think, gosh, that client is off their rocker, they don't know what they're talking about. But if they're threatening to sue, please report. Or another lawyer on behalf of your client requests your file. Again, that may be that something's brewing and you might want to report. Or a client expresses dissatisfaction with the handling of a matter, and there's an indication the client believes a loss has occurred. So again, doesn't necessarily mean that absolutely, again, the obvious, I've missed a limitation period, or one of those very obvious errors has occurred, but that, some kind of dissatisfaction has been expressed. There's that threat that the client may sue. Please report. And I'm looking at my next slide. I'm going to apologize in advance. We gave a very similar presentation in the Yukon last week, and I failed to update this slide. So it refers to the Yukon. We will change it before we send you the slides, but the how to report is the same. So again, in all of the territories, claims and for errors and omissions are handled through CLIA. So Yukon lawyers are, sorry, now I just did because I'm reading off my slide. Lawyers in Northwest Territories are required to report to CLIA again as soon as possible after learning of a claim or becoming aware of circumstance that might give rise to a claim. So to report, there is an insurance claim report form, which I believe should be available on your Law Society website, and that can be sent by email to the CLIA claims email address. And again, this is available on your Law Society website, all this information. And also remember that a report must also be filed with your Law Society. Now, when I was talking earlier about the convenience and the claims consistency and having that CLIA excess coverage, don't forget that if you don't, you need to look at whatever excess policy you have for required procedures. So again, even if that amount is above that 1 million and you have CLIA excess, report again to CLIA, and that will all be handled in the same manner. Now, for cyber claims, again, because this is a newer area and people aren't as knowledgeable, we wanted to make sure that people even, understand if a cyber attack has occurred. So we've included some of this information. So some examples of indicators of a cyber attack could be that your computer systems are locked, or you receive a demand for funds, property, or services to regain access. Your sensitive data has been exposed or has been threatened to be exposed publicly. Data migrates off the network and is being sent to an unknown source. There's a malware discovered on the system that has gone undetected for some time. So again, that could have happened from you received an email from a hacker with a link that you clicked on, and it's basically downloaded what they call malware into your system, and it's been sitting there basically undetected and stealing your data. Your computer system performance has deteriorated or is interrupted, and you suspect that it may be due to the malware. And also, often, again, if there's something that's been downloaded onto your computer, it may interfere with the speed or performance of your system. So if you're noticing a change, that could be something. A client or vendor alerts you of a third party attempting to impersonate your business. At the end of the presentation, I'll talk about a few of the loss prevention tools and resources we have in place. One of them is a blog that we have a weekly post. And a recent post is actually on fake websites. So, and it came out of, the articles originally came out of Manitoba, but it's something that is occurring all across Canada, is where someone is actually creating fake websites of law firms in order to defraud public. So again, I'll give you the link to the blog. That post is there if that's something you're interested in learning more about, and the steps that you can take to report it and avoid it. So, if you think based on, all those examples that perhaps a cyber attack has occurred, we've included the steps that you should be taking. So again, step one, assess if the email has been compromised and change your password. So if you think your law firm has suffered an email compromise, and again, that could be a client letting you know that your email account is sending them spam or phishing emails. And again, phishing emails are those um, fraudsters sending you emails with embedded links trying to get to, again, install malware or defraud you in some way. Before you do anything else, again, change your password. And if you haven't already done so, even though it's one of the requirements for your cyber coverage, enable the multi-factor authentication. And I didn't go into that in a lot of detail, but basically multi-factor is a system and where when you're signing into something, it doesn't just let you put in a password. It then sends a notification perhaps to your cell phone or to a different email account that you then have to authenticate in another way. So multi-factor, or it's also called two-way authentication. Again, and it adds an extra layer of security. And if you're using a provider that doesn't have multi-factor authentication available, highly recommended you look for a new provider that does. And again, not only is it's one of the requirements to be eligible for insurance, but it is just, again, giving your firm that extra layer of security. Next step you want to do is, if you have one, you want to engage with your internal or external IT provider. So if you have someone in-house or you contract with someone who handles your IT, reach out to them. Give them a summary of the situation. They know your system. So they should be able to provide the quickest, they should be the quickest in providing, evaluating the situation and determining what's going on. Now, if you don't, you're going to break step three. So, and step three is reporting that cyber attack. And again, you can notify the CLIA cyber insurance program. There's an email or 800 number there. And again, this is available on our website if you do unfortunately find yourself in this situation. You're going to want to communicate that you have a potential event unfolding, give a brief overview of the situation. Again, if you have an IT provider, specify to CLIA that they're looking at the issue. And again, this will make sure that the CLIA insurance program can assist or can reach out to them if the need arises. Now, if you don't have an IT provider, the cyber insurance program has what we call a breach coach that will help to assess the next steps and may recommend an IT provider if more assistance is needed. So again, this is a service that again we provide to walk folks through the next steps, try to resolve it, try to evaluate what damage has been done. So that breach coach is available, and again, that's something to think about. So that kind of wraps up, again, talking about, our the insurance products we offer and how to report a claim. I just wanted to briefly, and we've got a few minutes, so I'll take some time, and then we also want to leave some time for questions if there are any. But I've been with CLIA about a year and a half, and in that time, one of the main areas of focus for me has been loss prevention. So again, we're here for you again if something occurs, but as much as possible, we want to be proactive and help you avoid a claim altogether. So we've been working on several new initiatives. One is and actually Dave started this before I came on board, is our online loss prevention repository. And I've included the link there for you. And what this is a collection of loss prevention resources that you can go to and again, find some assistance. Just so you know, in the next few months, we're going to be updating it, reorganizing it. One important area of loss prevention is wellness. So we'll also be including a wellness toolkit there as well. So that if you're looking for resources to assist in that area, again, you can come to the CLIA website and get the help that you need. I mentioned when I was talking about the fake websites as well, our blog. So we think we're incredibly clever with coming up with the name Not So Risky Business. And that's our blog. It's been went live last December, so not quite a year yet. And what we do is it's every Wednesday there is a post, generally dealing with loss prevention. We have fraud alerts, again, loss prevention tips, um, um, really useful information. Again, those come out once a week. We try to keep them, call them short snappers, no more than a page. And again, information that should hopefully help you avoid claims down the road. You can subscribe to the blog if you'd like to receive those posts directly into your inbox. And again, just once a week, you'll receive that post right there. And again, you can just go to the link that I've included there, and there's a subscribe option as well. If you'd like to follow us in a different way, we also do have a LinkedIn page. And again, every week, these posts from our blog are listed there as well. Dave, do you have anything you wanted to add?
Do you want to mention
Do
something
you have any questions?
about the conference?
Oh, of course. Thank you. Another big important initiative, thank you, Dave, is at the end of the month on October 24th, we're hosting our first ever half-day virtual conference. So we're calling it the CLIA Peace of Mind, because again, as much as possible, we want to give the members in our subscriber jurisdiction some peace of mind here. So that hopefully, again, they can sleep at night knowing that, if there's a potential for a claim, we're there for them. There's going to be 3 sessions, about an hour long. So the conference runs from about 10 till 2 Saskatchewan time. I believe we won't have gone through the time change yet, so that should be the same for you as well. Each session will run for about an hour, but we're allowing time in between to, change speakers and to give people a bit of a break. We're going to have a session by a lawyer out of Ontario named Erin Durant. She's written a very powerful book about her struggle with wellness, and she's going to be talking about her experience there. We're also going to have Greg Markel from Ridge Canada, which is our cyber insurer, talking about common cyber scams. And also, I think we're going to be having another speaker there as well, talking about our breach coach service that we provide. So also what happens if you do have to make a claim and what you will experience there. And then if you've loved today, Dave and I will be back to give another talk about real life errors and omissions claims and how to avoid them. So we're digging into the CLIA vault and we're pulling out some real claims, which will anonymize, of course, and summarize for you. And again, talking about, again, ways that those could have been avoided. So registration is now open. You can go to, again, our LinkedIn page. And actually, we're partnering with the Law Society of Saskatchewan on this. So if Jessica hasn't made this information available on the Law Society of Northwest Territories website, you can go to the Law Society of Saskatchewan and it's there. And that's actually where you'll be directed to register as well. So yeah, stay tuned for that, and we hope to see you there. Any
Thank
questions
you
from the group?
so much, both of you. I am looking up for questions in the chat. Also, the information for the conference is available on our website for anybody here that wants to do it.
And can I just say, because this actually was one of the questions we had from the Yukon, and it surprises and delights us that people keep mentioning it. And I wish I had my copy here, but of course I've now left it at home. But CLIA for many years published a book called The Safe and Effective Practice, which I know the law societies used to actually hand out to new lawyers. And the last edition, I think, came out about 14 years ago, or maybe it was in 2014. Anyways, it's been a substantial amount of time. Again, every time we visit a jurisdiction or give a talk, people comment on it and ask us when a new edition's coming out, and we're on it. So if that's something that you've been waiting for, it should hopefully come out in 2025. We're just in the initial stages of updating it now. So that's another little bit of information I wanted to share with the group.
I can't wait. I've only heard rumors of this, so I'm excited to see it for myself. Can't wait. The blog is amazing. I use it all the time. I will add pieces to our weekly bulletin. And I have posted some resources on our website as well. So I'm a subscriber. I highly recommend it.
Great, thanks.
Any questions from our attendees or insured lawyers?
Yes,
If
I
not,
guess if there aren't any more questions, I will just maybe close by reiterating that we are here for you. If you need to get a hold of our office, if you have any questions at all, please feel free to get a hold of us. Our contact information is on the website, and we're more than happy to answer any questions about today or claims or anything to do with insurance. That's what we're here for, is to provide value to our membership. So feel free, absolutely.
thank you.
And I'll just add to what Dave said there as well. And like I said, we're putting out those weekly posts on the blog, and any topics that you'd like to see, again, reach out and we'll do our best. So and that's what we always say to our subscribers as well when we meet with them. So again, if there's topics you'd like to see, please let us know.
And you can ask for those, request those through me. Happy to take requests and pass them on also.
Perfect, thank you.
One of our participants says, no questions. It was very informative. It was very informative, jam-packed. Thank you both so much.
Thanks for the invitation, Jessica. Much appreciated.
Yes,
Thank you so much. And I can send the presentation to our participants here as soon as I get them.
Sounds good.
Thank you
Perfect.
so much, and I will see you on the 24th. I'm sure I'll hear from you before then. Okay.
Great.
Bye, everyone. Thank you so
Thanks, everyone.
much.
Have a good
Thank
day.
you. You too.